Good morning, Colorado, and welcome to today's issue of Colorado Mortgage and Home Loan Rate Update for Wednesday, the 5th of October. And I'm Randy Flood, the only certified mortgage coach in the state of Colorado. And it's really a crazy market today. In the rates go up category, the IMF, the International Monetary Fund, it's pledged bailout support for Greece and some of the other countries. And this has really sparked and helped the Dow Jones to rally. And with the rates go down category, the challenger job cuts were significant. I'll show you that chart in a second. And the Mortgage Banker Association, the applications were down 4.3%. The Challenger report is released every month from an employment company out of Chicago, and what it does is really measures what the firings and layoffs within the sectors are. And this is worse since 2009. And I just want to show you, especially like the last 3 months. June of 2010, there was like 39,000 laid off. And this year is 41, almost 41 and a half. July was 41.6 thousand, and then it was like 66 and a half thousand last month, and then in August is 37.4 thousand, and it's like 51,000. So what is happening is a lot of we're losing a lot of jobs. And primarily these are in government. A lot of it is due to the Army's five-year troop reduction plan. And Bank of America has laid off a bunch. And the other financial institutions will probably be doing the same also, because they're also on shaky ground. This is what's happening in the mortgage-backed securities market. Yesterday we actually broke the trend, and a lot of that was due to the IMF talking about bailing out Greece and Italy. And and today we actually opened up lower, which means interest rates are higher. Now, technically, I think we're going to be coming down and testing this range right here. In any other type of market, where they're not so focused on Europe, and they were actually focusing on our problems here in the U.S. And I would say that technically we'd have a great rally where interest rates would significantly improve. But right now the market is crazy. The Treasury tanked over last night because of the IMF's bailout of Greece. This is what the other market timing services or our mortgage market timing services are recommending. Rate Alert, you'll notice that they've changed their 7 to 15 day outlook as far as locking, because it's so volatile right now. And that's what happens in these crazy times. The daily rate lock advisory, they hadn't issued theirs out today, so this is yesterday's. I want to show you the volatility. This is from Monday, and you can see how the pricing of the bonds and the treasuries have fluctuated. And Monday was a good day for us. This is what it looked like yesterday, and you can see that we're down in the red, which means interest rates were actually increasing. And you can see that it refreshes because this is a live feed. And you can also see that we had several alerts yesterday, which meant the investors came out and the lenders came out and reissued interest rate sheets for the worst. And here's today. As you can see, we opened up and we went down significantly, and that's the reason the mortgage rates are actually worse than what they were yesterday. And this is another reason too that I don't quote rates my rate update, because rates fluctuate throughout the entire day, and to actually post something by the time I post it would be outdated, and you need to get the current rates as they are going on. In summary, it's about Greece again. Italy was downgraded 3 levels by Moody to A2, and Moody may actually downgrade the other countries such as Spain, Italy and Spain. Spain and Portugal and Ireland. The IMF talk as far as Greece, Italy, as far as the bailouts there, the huge swings in the Dow. Already mentioned that, because they overreacted from the European comments. Bernanke didn't say anything yesterday as far as, he fell short of saying exactly what he's going to do. And because of that, the treasuries, really took it hard. And that's the reason mortgage rates are increasing. Challenger job rates cuts were through the roof, very, very high. And that should have really helped mortgage rates, but it didn't. And I already mentioned about the treasuries. We're technically challenged right now. And I think we're going to be going on the downside, and I'll talk about that in a second. Now, fundamentally, and when I'm referring to fundamentally, I'm referring to, what the news, how the markets react to the news and the emotional side. And it's really confused right now. And as I was saying, I think we're going to be going on the downside. In other words, I think rates are going to increase slightly. And it's all due to irrational and the emotional markets right now. Any other time, I would say that we'd be posed for a rally in the bonds and have much lower interest rates. But, these are not sane times in the market. The thought of the day, you win some, you lose some, and you wreck some. And that's really true in the market right now. And, I try to advise my clients so they lock at the proper time so that they can actually get the best rates. If you're looking at buying a home, definitely call me. I'll advise you. Also, the same thing if you're looking at refinancing your Colorado mortgage. If you like the rate update, please click the like button below, and also share it with your family, friends, coworkers, because they too could benefit from this great advice. And as always, only wanting the best for you. Take care.